The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 5th magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out this circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, well, then let those fingers do the walking. Send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question. And, of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow up 257 points, trading at 24,795. S&P is up 27 points, 27.18. NASDAQ 100 up 76 points. All three of them up 1 full percentage point and then some. Same with the semiconductors. They're up 16 points, trading out at 1379. NASDAQ Composite, Wilshire 5,000 up as well. Transports are down 18 points. Spot volatility index trading out at 1812. We'll take a look at that and the important number to be keeping our eye on. Gold's off about $4, 13.19 and change. Silver's down 4 pennies, so unchanged on the day. Light sweet crude, anything but unchanged, up 2%, up $1.33, trading at 62.58. Leading the charge here to the upside, it is Booking Holdings. That's up $37 or nearly 2%. Amazon is up $19. $15.19 is what she is trading at. Google's up 15. Mount Everest, it's really called Everest Real Estate Group, up 13 bucks or 5.5%. To the downside, it is Dermira Inc. down $16, 63%. Ouch. IPG Photonics down 3% or $7. AutoZone down 7. Stamps.com down 6 and change. Spartan Corp off about 25%. Nearly $6 buckaroonies out there. So what do you want to look at? Because I want to look at what you want to look at. I see our first question inside the Tiger's Den. Let's go see it. It says, my question is below if time permits. If not, I understand. Let's see. Below. I don't see it. Anyone see help dinners? Anyone see the S&P index selling next 3 to 4 weeks down under the February 9th low, and why? All right. So I think that is the question because that was down below. So let's start by taking a look at the S&P 500 and things we want to keep an eye on to assist in answering that question, because we really need the market to reveal its information to us in order to be able to give us an edge of a probability of being able to answer that question. Higher or lower really would be for the next 3 to 4 weeks. The level that I would say is one of the first places for you to focus on, especially in taking a look at the S&P 500, is going to be its volatility index, the spot volatility index. Now, what the Sam heck is this red line on this chart out here? Did I put that out there? I don't even know what that is. So we're just simply going to, because that is not the, there we go. The line, and what I want you to do, folks, for those of you that are watching on Tiger TV, I want you to really focus on the bottom portion of the screen and really inside the data box, the bottom number where it says MA. That MA, that moving average, happens to be the 50-day exponential moving average. Now, look, we're trading, or the spot fix is trading at $18.10. 1709, the 15-day exponential moving average. If we see a close below the 50-day exponential moving average, not a test and rejection, but an actual close below that line, then my response would be I would see buying occur. I don't know for how long, whether it's next 2 to 3 to 4 weeks, 1 day, but any period of time, as long as the spot would last for any period of time, as long as that spot volatility index stayed below the 50-day exponential moving average. To give you an idea of the importance of that line, the spot volatility index has been above that level since January 16th. Now, we did have where the S&P 500 was moving higher while the spot volatility index was moving higher as well. That never ends in a good that never ends well, and that most certainly is what we saw take place. This is a better way of taking a look at it, where the bottom panel, the blue line, is the closing price of the spot volatility index. And what we saw here was again, a rising bottoms pattern in the closing price of the spot volatility index. And what we saw was a rising tops pattern, the opposite, inside the S&P 500. That's a divergence that doesn't end well. We never know what does that mean. Is that a 2% to 5%? Or in this case here, an 11% and change type of correction out there. That was it. So what we're watching now is that spot volatility index, because when price is below that level, it says the market is free. The S&P 500 is going to do one of two things for the most part, okay, assuming that the spot volatility index hasn't found a bottom. And so therefore, the most part is the S&P will move sideways or higher out here. If you see price test 1709 and the spot volatility index stays above that level, then I would say, yes, I can see a reason why you could see selling for some period of time, that period of time being as long as the spot volatility index stays above the 50-day. In order to answer the question, how likely is that to occur out here, we really need to go take a look and see where is the spot volatility index trading in relationship to all of its futures contracts out here. Well, at least now it is in essence back in alignment. What I mean by that, if we take a look at the March, April, May, June, July, August, September, October, and November futures contract all the way out to November, you'll see that's trading at $18. Well, it just got back out of line. It's at 1802. Typically, you'll see the spot volatility index trade well below its furthest out futures contract and really below all of them. That would be, so the combination of closing below the 50-day EMA and getting back in line and trading below all of its futures contracts out there would then say that the volatility index is headed down towards the 9 level. 888 is the number that we would use today, but we know that that number will change. So the first answer or portion of the puzzle to answer the question, what's the S&P going to do over the next 3 to 4 weeks, is going to be what's the spot volatility index doing as it relates to its 50-day exponential moving average. Steve Rhodes with TFNN.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we're trying to answer the question, hey, what's the S&P going to do from this point forward? And this specifically with regard to the S&P, the chart that we have up on our screen right now is take a look at each of the sectors inside the S&P 500. So in order for the S&P 500 to be moving higher versus moving lower, the question is over the course of the next month, basically 3 to 4 weeks, what needs to happen? What are the reasons why? And as we take a look at this set of charts here, we're looking at the 10 sectors inside the S&P, the XLK being the heavily weighted sector out here. This is the sector that has been the strongest. So there's, and I don't know the weighting, around 20%. You know, it shifts back and forth out there. You can go look it up each day. It's a pretty easy thing to do out here. But you can see that when you take a look at the dials underneath the XLK, the weekly, the daily, the 240-minute, and the 60-minute time frames, all bullish. And they've been bullish. Really, the XLK, if we look at its weekly time frame out here, this basically has been bullish since November 11th. Out here, it just has never given it up. So, and with regard to the number of issues inside there of the S&P 500, there's basically 60 or 40s, 50, 66, something like that. 66 issues inside there. If you look at the utilities on a weekly basis, that's bearish. That is not the number 2 sector inside there. Financials are in a bullish configuration on the weekly. The daily is just slightly bearish. If we take a look at the number of issues trading above their market profiles, it's 14, below 19 out here. And really, and that was on the daily time frame. Let's just stay with the dailies out here. Go like this. XLK, bullish. XLU, daily, bullish. XLV, I think that might be the second weighted in sector. Second or third, bearish. XLF, bearish on a daily basis. XLP, bearish. XLB, materials, bearish. XLE, energy, bearish. XLY discretionary, bearish. XLI industrials, bearish, when we take a look at the daily chart. So with regard to a market breadth standpoint, that's what these dials here are doing. There is a lot of damage that has been done under the covers, and a reason why I'm sure that our Denner is looking for reasons why price could move lower. Whether it's going to go test the February 9th low or take it out, that much I don't know. But as these switch to bullish out here, then the opposite is true. So that's what's going on. We take a look at the sectors within inside the S&P 500. As a whole, if we look at the S&P 500, we're going to see that it still is in a bearish mode, meaning there's 98 issues trading above the top of the box and 156 down below. So you can see the damage that is still out here. Well, if that's the case, why is it trading higher? Is this just a counter trend rally? I don't know the answer to that. That final question out here, if we look at the S&P 500, what does it need to do in order to prove to you and I that it's more than just a counter trend rally? Well, it needs to close above Stevie's red line today. We're trading at 27.1894. Stevie's red line, for all intents and purposes, is 27.18. Maybe it's 27.17 or so and some change out here. We're just going to call it where it's trading at, right about right now, 27.18, 27.19, 27.17. So it would need to clear this area with some gusto. Otherwise, all that's taken place as of 1:22 in the afternoon is a counter trend rally back to resistance. And the importance of this resistance area is that that price oscillator is sitting right on its zero line. Now, the S&P 500, completely different animal than, let's say, the NASDAQ. So back to answering the question out here. What would be reasons for prices to move lower? The underlying instruments and sectors within inside the S&P 500 are hurting as we speak right now. However, what we'll want to do for the S&P 500, as I've said, is really pay attention to that spot volatility index. But we need to understand what the other indices are doing as well. So what are they doing as of 122 right now? We'll take a look at its advanced decline market breadth. And we're going to first focus on the New York Stock Exchange. And the reason that we are is because the New York Stock Exchange tested and rejected its February 9th swing point. It tested the high of that swing point. It did it on Friday, and therefore we have a rejection of price. I don't know from a volume metric what we have, but what I do know from a market breadth metric, right now at 123, price has or the advanced decline oscillator has crossed the zero line. It's trading at positive 35 and change out there. Staying above or closing above that level today, staying above it and closing above it tomorrow, says the S&P 500 is ready to run higher. Run higher to where? Well, either some retracement of its last set of swing points, that being from February 27th down to the low of Friday, or all the way back up to that set of swing points from February 27th near the 13,000 mark. That's the New York Stock Exchange. If we take a look at the NASDAQ composite, it has an overwhelming vote for, I'm at least going to go and test the swing point here from the trading session of February 27th. It's already trading inside that level, the low being 73.30. We are at 73.34. If you close above 73.30.35, pretty good chance you're going to make a run for the 74.38 level. Inside the Dow, it was a test and rejection of its February 9th high. Its advanced decline oscillator reading is really close. Really close. It probably just needs one more issue inside of the Dow to turn positive to flip that thing above zero. So here, should you see over the course of the coming days, doesn't have to be today, let's just say if it is today, if you see the advanced decline oscillator in the New York Stock Exchange close above zero, the NASDAQ composite, which is already above zero, would be the second or third day above zero. You see the Dow above zero, and you see the spot volatility index down below its 50-day, 1709. The markets are going to move higher, not lower with regard to where they're headed next. Trying to figure out the next 3 to 4 months, I'd rather just at least try to figure out, hey, what's likely to occur over the next few hours, 24 hours, 48 hours, 36, 72. You know what I mean out here. Where is price likely headed to? And then we measure those levels, see what happens should price be able to take those areas out. Now, Let's take a look at the NDX 100. Let's go see what it is doing out here. Can I do that? I can do anything. That's the beautiful thing. So actually, I can do anything. And as we take a look at the NASDAQ 100 now, we're going to see that the NASDAQ 100 for each of its time frames, with regard to its TAS market breadth, is bullish. Bullish on the weekly time frame, bullish on the daily, bullish on the 240, bullish on the 60 out here. So the NDX 100, much like the XLK, is basically saying, I want to move higher. And move higher to where? Well, if we take a look at what the Qs did and just look at its volume metrics, we know that it had that washout low, the way that it makes bottoms out here. That was from the weekly perspective, dailies as well, but February 9th out here. We know that the Qs on February 27th and February 26th were pushing into its all-time swing point high on January 26th with volume. It was 32 million shares, and being pushed into were 39 and 42. Sounds to me like the Qs are headed back to its highs. Maybe the low of the highs, maybe the high of the highs. Right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So John in Sarasota wants us to take a look at ticker symbol HACK, hack. Looks like it's an ETF for cybersecurity out here. And let's see, the question is, what do you see for hack? And 2, TWO is another ticker symbol. Well, if we take a look at this hack chart, well, one of the nice things you're going to see is that nearly every single shareholder that is holding on to hack is in the money out here. Maybe just a few that have bought at the very tippity top that aren't. But for the most part, everybody is, as prices now have been able to clear the June 1st, 2015 swing point high of 33.91. We're at 35.08. Now, that was a high volume swing point high. It's been tested. So one of the things that you'd learn, one of the first things that I learned inside of the art of timing the trade is that if you can find some of these high volume highs, they're likely to be tested. And this one was tested. It's been surpassed. That says that 33.91 needs to hang on as now a support level. You want to see price. Hack should go higher as long as price is able to stay above it. It has not taken that level out with volume. That was 37 million shares back then in 2015. And as price was able to move over last month, as an example, 5.5 million shares. We're new into the month right now. Just a few days, so pretty hard to gauge what that volume is going to be. But we've been at basically 5 million shares for the last 3 months out here, so hasn't taken it out with volume out there. That does not mean that it can't move higher. Watch 33.91. John, it's true on the weekly chart as well. The weekly had volume on June 22nd, the week that began, of 7.9 million shares. You're up and over it with 752,000, 1.7 million shares out there. Even as price moved into it on February 12th, or the week that began February 12th, was 1.2 million shares. So where can it go from here? Just in taking a look at this chart, what we would do is take a look at some type of expansion. And if we look at the expansion from high to low out here, maybe this is headed towards 37.92 as long as it stays above that 33 level out there that I gave you. Maybe it's a 1.618 of 43.03. I don't know. It just hasn't crossed but we do know is that it just simply needs to continue to close above. John, I don't know if you're in it. You want to see this stay above 33.91. Do you want to chase it? If you're trying to chase it, I don't know. You'd feel better as a chaser, like an ambulance chaser, if you could see this thing passing through a key swing level with volume out here. And in the weekly and monthly, that is not the case. Are there any metrics on the daily that are worth noting out here? Well, on a daily perspective, you'd look at what January 29th was 33.73. That'd be at 148,000 shares. That'd be another reason not to chase this. Not a lot of liquidity inside this thing. So, but hey, 33.73 with 148,000 shares was passed with volume, 293,000 shares. So this would just give you a price projection, A to B equals CD. Excuse me. The conservative one that I would be looking at here. You've already done the one-to-one, 35.92. 37.38. So that's what I see when I take a look at hack, let alone I was hacking into the microphone here. So my apology for that. With regard to Two Harbors Investment Corp out here, not as pretty of a stock chart as we looked at in taking a look at hack. So let's try to figure out where this is headed to. Now, on its daily time frame today, if it can close over 1502, suggests running back to the February 16th swing point, John. That is a bearish structure daily profile. Excuse me, daily structure, because the center line is closer to the top. So close to about 1502 would be short-term bullish. We'll use a daily chart as short term. Intermediate term would be the weekly chart. You're trading below the bottom of its weekly chart. That says, hey, maybe not so fast. You want to see this close above 1516. And then when we switch over and take a look at the monthly time frame, price is also trading below the bottom of its box, 1525. So if you're looking to get in on this action, I'd say wait. Bullish structured weekly, if it can close back inside. Right now, that's significant resistance. Bullish structured monthly, 15.25. I'd wait for another, 18 cents to prove to you that this thing means things out here. And then when we say means things, you're going to want to be watching the volume because you'd like to see it have more than a couple million shares on a daily basis. Today you're at 792, so today is not that day. I'd say just be careful on ticker symbol TWO out there. Just be careful. That's all. That's what it looks like to me. Don't, if you are in this thing, TWO. Let me see if I can put one of my other charts up on at least one of my screens out here. You know, trading above 1490. If this thing were to close back below 1490, that's Stevie's red line. That would just say, boy, this probably has a better chance of going back and testing the lows out there from February 6th. When was it? February 6th out there versus trying to actually run higher. So, John, I hope that helps you out. Ticker symbol TWA. Thanks so much for writing in. Let's take a quick peek here, see if anyone else has a request out there. And if there are no requests, well, just let those fingers do the walking like John in Sarasota did. If not, I'm just going to ramble on like rambling Rhodes versus Ramblin' Rose, and you know who sung that song, don't you? Of course you do. Good old Nat King Cole out there. So what else is it that we're going to pay attention to and look at out here? No questions with regard to Goldilocks. Seems to me like something we probably ought to look at out here. And so in the world of gold, one of the things that we'll look at are its brand new daily market profiles out here. So the nice thing about gold is that it's formed a new bottom and top and center line on a daily basis. That market profile does have a bullish structure. 1315.40 is the bottom of its box. 1319.60 is the bottom of its weekly profile out here. Just the beginning of the week, but that level has been tested. It's really going to be 1315.40. If we see a close below that on a daily basis, not a good thing for gold. What does that mean, not a good thing for gold? Well, let's look at the other chart out here. This is the danger thing, potentially dangerous. And here's what we talked about. What you noted on Friday. You said to me, you said, you know, Steve, in looking at your chart out here, I think odds favor that price oscillator of yours, the difference between the 19 and the 39-day exponential moving average, I think that's going to head to zero before we really know what gold's next move is. It's at a positive 1.71. Today's action kind of assists with the continued decline, meaning price gets up, tries to take out Stevie's red line. Right now that's priced at 13.29. Can't do it, continues to back off. It may just be moving sideways in this very tight kind of trading range out here. We'd really love to see the price oscillator get down to zero, and then a test of Stevie's red line to let you and I know whether it's off to the races, to the upside, or to the downside. Steve Rhodes with TFNN. I think it's to the upside, but we'll need the market to prove it to us.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So Danny in Atlanta wants to take a look at the yen. We're going to take a look at yen futures. That way we're not dealing with any kind of a delay out here. And looks like yen futures are in the process of maybe rolling over into the June contract. Is that correct, Danny, out here? If we take a look at that contract right now, what we're going to see is that you'd really like to see price clear. This is if you want to be long again. You'd like to see price clear the February 16th high out there. That's at 95.48. If that were to occur, then you'd have more of a breakout going. That's taking a look at the yen. Let's look at that futures contract. If I look at the continuous contract out here, Danny, and we just do a little wave count from the trading day of February 12th, so 2/12/17 out here. Interestingly enough, Friday happened to be wave number 7, letter G on my chart out here. So and price thus far has just come back and tested Stevie's red line. That's looking at the daily chart. You're slightly below it. We consider that to be a test out here. So if price were to close above the high that you and I just looked at and then take out that 7th wave move, that would be on a short-term basis, meaning the daily charts, that would be nice and bullish for you. If I look at a weekly time frame, try to figure out, what's going on out here. Last week happened to be a Tom DeMark 9 count, a setup 9 count out here. Oftentimes at a 9 count is where you will see some type of change in direction. You especially see that, or you're more likely to see that, meaning that it's lost its momentum if bar number 9 is trading inside bars 5 and 6. Does it have to? No. But here's an example on a weekly basis. If we come back to the week of November 10th, 2017, this was trading into bars 6 and bars 5. This was on the way down. But the number 9 just simply means that you're taking a look at each bar as they're forming. And the question you ask yourself is, this close of this bar lower than the bar 4 bars ago? And if it was, you get number 1. If you do it a second day in a row, you get number 2. If you do it a third day in a row, you get number 3. If you miss out on day number 4, you got to start over. Well, in this case here, it didn't have to start over as it got down and made that low on November 10th, the week of November 10th. Now, this week, or last week I should say, didn't trade into bars number 6 or 5. When you trade into bars 5 and 6, it's just kind of a sign of slowed momentum. Doesn't always have to work that way, but that's really one of the first things you look under the hood. You know, when you pull the car into the garage and even if the check engine light is on, what are you going to go look at? The engine. You're going to go at least look at the oil. You're going to make sure you got oil in that thing. Well, in this case here, your checkup, the check engine light, when you see that number 9 is the oil dipstick is, looking to see where it's trading at with regard to bars 5 and 6. We don't have that here, but at least you now have, got a swing point you're dealing with. You got a 7th wave move. It's setting up for the yen to possibly go ahead and pull back. That's what it looks like to me, Danny, when I take a look at the weekly continuous. When I take a look at the monthly continuous, anything else that's out here? Yeah. Look at all the selling up ahead out here. The bears can't hide. Look at those bearish engulfing candles out here. Now, price, granted, is much higher. Weekly basis, monthly basis, you're still below zero with regard to the price oscillator. So the yen is far from being out of the woods with regard to getting stronger out here. Stronger yen, weaker dollar. The yen, I believe, is the second weighting. Yeah, I think it's the second weighting. I know the euro, then I think it's the yen, then the pound, then the Canadian dollar, Swiss franc, and Swedish krona. So, Danny, that's what I see when I take a look at it. So hopefully that helps you out. Inside the den, Mr. John would like to take a look at the June Treasury bond. The question is this: is the June Treasury bond poised to decline under 141.16 and target 139 and lower? Over the long haul, I believe the answer to that is yes. 139, by the way, is the rising trend line or thereabouts. Now, to show you that, folks out here, I got to go to the continuous contract. It's the only way for me to do that and give you kind of a target, put it on a quarterly basis out here, because that's probably a good way to track it. And if we look at a trend line out here, give me some kind of green. Yeah, let's use the green arrow out here. I guess we'll start back here in 1984, and the trend line's right around in this area. I need to kind of extend it. It's really probably more like a channel line is what I really should have drawn out here, but I'm using right now just the line itself. And inside here, if you got down, really the target would be 135. Is where that trend line is. So just a point in time, but that's what I'm looking for. Longer term is the 139 level, could be even lesser than that. However, we really need to see what the Sam Heck is going on today, and by today what I mean is let's go take a look at at least two things. First, let's go take a look at this chart here. We saw a nice counter trend rally. We saw price moving lower, doing less relative energy. That was that diagonal line that formed on Stevie's chart out here. That's one of Stevie's proprietary tools. It's a tool you just don't want to be without. What else took place at that same time? You happen to see that Tommy DeBark 9 count out there. Remember, we talked about how that can be a signal for a change in trend. Could be short term, could be long term out here. This was at least a counter trend rally. Now, the interesting thing is, where did price bounce up into? Well, you see that green dash line. That's one of the levels. That happened to be, in essence, the high of that entire 9 count to the downside out here. So that could say counter trend rally over. However, price is above Stevie's red line. Maybe there's more. Maybe this is setting up a C point of an A to B equals CD. Price needs to get and close below Stevie's red line, 142 and change out here, in order for 139 to become your target to the downside. So you're saying under 141.16. I'm at the 142 level out here. That's step number one. Step number two is, hey, Steve-O, what's going on with regard to its market profiles? And here, what we want to really focus on, in my opinion, is the daily time frame out here. And the daily time frame, and here's where you probably get another piece of that answer. Take a look at when that counter trend rally was moving to the upside and it hit that resistance zone right? It hit that resistance zone of that Tommy to mark that little green dashed line out there. It was also hitting the top of what was a bearish structured TAS market profile. That was 144 and 12 ticks out there. Well, take a look where prices now moved down to. The bottom of that box, 142 and 1730 seconds out there. So therefore, that's really where you're going to get your answer. I don't think it's the 141 and 1630 seconds. I think it's the 142. If you close below that, that says that you at least go down and you test that low from the trading day of February 21st out here. Right now, you've got Treasury bonds trading inside a range. Resistance held. The question is, will support hold? And I don't know the answer to that question. It has thus far when it's been tested. That's February 27th and February 28th. I hope that at least provides you with some information, Mr. Z, to answer that question. He wrote
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So to close out today's show, we'll take a look at ticker symbol MPW, Medical Properties Trust Inc. out here. Tim is in this with a profit, and the question is, where do you see it going? So you can help me answer the question as well out here as we take a look at its three different time frames first. So we've got daily, weekly, and monthly. And as we take a look at this, Tim, we're going to see on the daily prices trading within a range between 1176, the bottom of its profile, and 1417, the top of its profile. Bearish structured profile. What this really means is you would not like to see this trade or close below, close below 1176. You go down to 1182 this morning out here. So right now a range, 1176, 1470. 1417. What happens if it closes below 1176? Well, you probably get down to 1213. 1213 happens to be the bottom of its weekly profile. This thing is below its monthly profile. Take that back. 1213 is the bottom of its monthly profile. It is trading and has been trading for the last 5 months below the bottom of its weekly profile, which is 1283. So, and for the last 2, 4, 6, 7, 8, 9, 10, 11 days out here, it's kind of been in that range there for you. So what do I see? Where do you see it going? I see it going higher if it can clear resistance. 1417 out there. Higher to where? You know, if it can clear 1417, that would be a heck of a move out here. Tim, if it could clear 17, then it brings into play the July 18, 2016 level in the 1588 type area out here. But right now, I don't know what your profit is on this thing. It looks like you have a rough road ahead until this can clear 1417. Hope that helps you out. Hey, folks, stay tuned because your favorite polar bear, he's the world's favorite polar bear. That's David White. He's up next Monday. That means it's fun day. And you got Tom O'Brien from 3 to 5. I'll be back with Tom for just a quick segment at about 3:15. Have a great Monday. If I don't see you then, we'll see you on Terrific Tuesday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.